May June 2014 is the past paper that we're looking at. We're specifically looking at question 4 to practice these ratio questions. This question is 27 minutes, 23 marks. This is a long question, so there's probably quite a few calculations to do. Then they've given you a list of balances. What I would do right at the beginning is identify what these accounts are. So land and buildings, assets. Debtors, assets. Creditors, liability. Inventory, assets. Vehicle, assets. Bank, assets. Current portion of the long-term loan, liability. Borrowings, liability. Income for sales. Expense for purchases. Expense for finance costs. Profit for the year is profit for the year. Okay, so that's what you've been given in the question. They give you additional information. They tell you that credit sales represent 65% of total sales. They tell you that credit purchases represent 45% of total purchases. They also tell you that there's no tax in the above financial year. Right, we know that sole proprietors don't pay tax as a business, they pay tax as an individual. And then you've got cost of sales as well. Go to the required, see what you've been asked for. All formulas and calculations must be shown, and answers must be run off to 2 decimal places. 4.1, total assets. So what must I do? I need to go back to the question, and I need to add up all my assets. That's all. Okay, so let's put that there. 4.1, total assets equal, let's add up. Land and buildings, 476000 plus. Debtors, 66164 plus. Inventory, notice you've got 2 years here. I'm looking at the year 2014 and I've been given that, which was beginning of the year. Opening stock, closing stock. What do I use for the calculation? Closing stock. So the 109. 385 plus. Vehicles at carrying amount 161269 plus. Bank favorable 3909. Anything else? That's it. Equals an answer. So 2.5 marks for adding up all your total assets. Did we get 816727? Good. 4.2. What else do they want? Asset test ratio. So now we need to write down the formula. Current assets minus inventory over current liabilities. Okay, so I'm looking for my current assets. Current assets. Land is a long-term asset. Debtors is a current asset. So there's one. 66164. Creditors control is a liability. So we'll put that in the denominator. So brackets, divide by, open brackets, creditors, 80470. Okay, you can show this separately, right, if you want to. I'm just discussing it, we can see everything on screen. Inventory is a current asset, so I'll add it 109, 385, and then later on you'll have to subtract 109, 385. Vehicles, non-current. Bank, current. Plus 3909. Current portion of a long-term loan, that's short-term, so you're going to add that to the current liabilities. 10,000. Long-term loan, long-term liability, and that's all other stuff. Right, and that's it. Close that bracket, equals, plug that into the equation, calculator rather, and get an answer of 0.77. Did we get that right? Okay, what went wrong? Oh, okay, yeah. So you have to subtract the inventory. So you add all your current assets up because you need your current assets, and then just minus the inventory. Okay, so I subtracted the inventory there. Okay, 4.3. What do they want? Inventory holding period. Inventory holding period, there's it. Okay, so in order to calculate the inventory holding period, I need the average inventory. Average inventory start plus end, divide by 2. Okay, there's the start, there's the end, divide by 2. Plus 109,385. Close bracket, divide by 2 equals an answer. There's it. Average inventory. Cost of sales, did they give that to you? There's it. Do you see it? Okay, so inventory holding period equals 99817.5 divided by 283731 times by 365 equals 128 days. Happy? Okay, good. 4.4. What did they ask for? Gross profit percentage. So, gross profit percentage is that. Gross profit over sales. Copy the equation, write it down. In the exam, you'd have to remember it. Okay, then we need to work it out. Right, so I need gross profit. How do I get gross profit? Sales minus cost of sales, right? Was I given sales here? Yes. Was I given cost of sales here? Yes. Cost of sales and sales. The difference is gross profit, right? Do you agree? Do you agree? Sales minus cost of sales is gross profit, right? There's the key. Knowing what the gross profit is. Right, so gross profit percentage equals gross profit, which is sales. What was our sales? 400,000 less cost of sales 283, 731. Close brackets, divide by 400,000 times 100 equals. Divide by sales. Okay, gross profit divided by sales. Gross profit is sales minus cost of sales. Sales 400, cost of sales 283. Got that? Okay, 4.5. What did they ask for? Return on assets. Return on assets, there's it. Okay, so this one you asked me about earlier, profit before interest and tax. Okay, that's what I need to calculate. What profit did they give me? They gave me this. Profit for the year. Right, so if I'm looking at profit before interest and tax. Okay, what happens? Well, I take off the interest. Less interest. That's going to give you profit before tax. Then I less the tax, and then I have profit for the year. Okay, this is how we draw up the different line items for profits. Okay, so what line item do you want? You want this, don't you? Do you agree? I want this, right? Do I know what the interest is? Yes. Finance costs. Finance cost is your interest, 6,200. So you're going to minus 6,200 here, less finance costs. Profit before tax, you don't know. Less tax, they told you. No tax. It'll always be 0 because it's a sole proprietor. And then profit for the year you can see is 32,000. 32200. Okay, so if you're starting here, how do I go backwards? Do I add or subtract? I add, because the amount that I start with must be bigger than the amount that I end with. Does that make sense? Okay, so this amount will be this plus that. Okay, that's what you're going to start with. Right, because on your calculators, if you take 38,400 and you subtract 6,200, what do you get? Right, so always just remember to think about what you've been asked to calculate. Right, do I need the total assets? No, I don't, because I worked it out earlier. I'm going to go to 4.1. Where is it? There's 4.1, and I'm going to write down that answer from question 4.1. Does it make sense? Okay, so what is the ROA? ROA is going to equal 38400 divided by 816727 times 100 equals 4.7%. Got that? Is that okay? Feeling better? Kind of. Getting there. Okay, it'll get better with more practice. Okay, so that's important. You just need to think about the line item that you've been given, and do I go backwards or forwards? Here I'm going backwards. I'm trying to get what the profit was before I subtracted the interest. Make sense? Yes. Okay. Was there another question here? Solvency ratio, 4.6. Solvency is? Correct. TA over TL, right? If you go back and look at your textbook, you can see it there. Total assets over total liabilities. Right, so go back to the question. Can I take this off, this bit? You okay? This top bit, you done with that? Okay, I'll write down the TA so long. TA is this. TL is all the long term, so we need to work that out. Okay, so land, asset, liability. There's one. Creditors, 80, 470 plus. Inventory, asset. There's a liability, 10,000 plus. Long-term borrowings, there's a liability, 500,000. Sales, income, expense, profit. So that's it. Add all of that up. You get that. So that's your total assets over your total liabilities. So solvency is therefore going to be 816727 divided by 590470 equals 1.38. Okay, so how are you feeling now after doing this question? Okay, because you specifically asked to do it. Not too bad, right? Okay, so don't get scared when you see a question that's a little bit different to what you've seen before. It might be. All you need to do is what? Follow the correct steps. What did I do here? In all of them, I wrote down the equations. Then I went back to the question and I was looking for those amounts. That's all you're going to have to do. And that's the end of May, June 2014, question 4.